What's happening, everyone? SmartHelping.com here, live financial modeling. I am back in the office, back on the monitor. It feels better. I might get the cam up next week. So today, well, first of all, subscribe to the channel, like the video. That all is free ways to help support me. What we're working on is the mobile app that has freemium and in-app purchase logic as well as ad revenue. Today, we are focused on income statement, balance sheet, cash flow statement. Yesterday, we went and did all the formatting updates and linked everything with all the new tabs in the light yellow. Now we're going to do income statement, logic, balance sheet, cash flow. And today's Tuesday. Like I said, I'm going to try and slow my pace on these, so I really don't want to do more than one completed integration per week. Now, this could mean I have more time to do new models as well, or slowly work on other things instead of just these integrations. Let me do a quick sound check and a visual check. Make sure everything looks good on the new monitor. Okay. Test. Sound is good. Let's look at the visual. Looks great. You can see the whole screen. Nice. Man, it feels a lot better working at the desk than on the couch, which I've been doing for the past month and a half or so. I do have a huge glare in my eye from the window I need to shut. It's very annoying. I'm going to angle myself over here. Before we get started, let's look at this model. This template comes from the SaaS bundle, where we've got all kinds of recurring revenue businesses. Oh my goodness, I'm going to have a headache. I got to block this sun. This is so annoying. Shoot. I actually got to stand up and fix this. I'll be right back. This is horrible. All right, I'm back. That's so much better. Oh, that was so bad with that sun. All right, let's get started. I'm actually feel like I'll probably work a lot faster with this setup, so it's just smoother. I think the TV I was on was 30 frames, and when you hit OBS on, it was like really bad. But here it's really smooth. All right, so also, if you're watching this for the first time or you've been watching for a while, I'm open to ideas and content. Like I'll sit here and build. If you want something you want built, like a little tool or something that's not too unique or specific to any one thing, but just like a general tool, I will build it on here, especially now that I'm going, at a bit slower pace on these integrations. All right. So income. First of all, let's look. We're going to actually have more revenue streams. Let's see. Let's go to the monthly detail. we're going to have ad revenue, paid for no ad revenue, and in-app purchases. So we got three main revenue streams. We're going to call this ad revenue, paid uh, paid subscription, which is just paying for no ads or paying a monthly fee, whatever it might be for, and then in-app purchases. Okay. Now, let's link our stuff, right? So, revenues here. Revenues paying for no ads and in-app purchases. This is probably going to be the big one in most cases. Drag this over. Now, this is all zero because we got to update. I guess we could do this. It's a good time. We need to change control C5 to control C6, I believe. Let's see. Yeah, that's the launch date. So C6 is when it should end. So what we can do on this sheet, replace anything that says C5 should say C6. And only on this sheet. We don't want to go to other workbooks because other stuff that is referencing control C5 is actually accurate. Replace all. I also want to do it if there was anything locked on that, which there probably isn't. I want to replace that. Yep, I figured that'd be a good one too. All right, so this is good. That gives us a nice dynamic start month with our new global control setup. Perfect. We're not going to need depreciation anymore because we have a new dynamic input on that with our new logic. Here we won't need taxes either. Well, actually I can just dynamically reference that. All right, man, this feels so much more crisp and my back feels good. The reason I've been on the couch is my back was screwed up and it hurt to sit, but this is right now I'm actually more comfortable like this than on the couch working. So that's a really good thing. Okay, so income statement. Now we've got some numbers in here. Cost of goods sold, I believe will only be one line item. Yeah, row 68. Okay. Let's call that cost of goods sold items because it could vary, depends. Like there's no specific, like there's just miscellaneous cost of goods sold that are populated based on the cost assumption. So we'll just do a broad category on that. Total gross profit. Okay, so here we are going to be extending for fixed costs. We've got 1, 2, 3 plus startup costs. So actually we need 4. This is going to be general and administrative, sales and marketing, research and development. So 110, 147, 184. I'm not going to remember that. So first one was 110 though, I think. Sales and marketing, 84. R&D. Make sure G&A was 110. Yep. Startup costs will just flow from right here. And there we have it. Yeah, I'm loving the new setup. This is really nice. Very nice. Okay, and EBITDA is negative, the whole thing. That's obviously not good, but these numbers are just arbitrary. Am I missing something? Oh wait, no, EBITDA. Or am I double counting something? 53. This should be positive by August. Let me see. So revenues, August is 188. Gross profit 140. Oh shoot. The total fixed expenses are row 88. 84 is sales and marketing, 47. Okay, so that makes sense. I doubled the expense. So wait, 110, 184, 147. Wait, that's right. So here in August, I should have gross profit of, I got 19 here. What's my gross profit here? 140. And net purchase revenue is what I'm missing, I think, in 53. No, 53. Ah, I didn't drag over the sum here. That would explain it. Okay. And we'll do checks to make sure at the end all these things are linked up. All right. Feel free. Let me actually get my app up so I can see if you say something here. If you want to interact, feel free to hop on in. Yep. Okay. I put this right here. So this looks good. Interest. This looks good. This is all linked up. Although, why? Okay, so we don't start till January 2022, right? And that's fine. Income, taxes, this should all be linked up to the right thing. And this is the nice thing about importing all the logic and getting the positionings all right. We already have everything linked in and tucked away here. Okay. Income statement done. Now we have to make some updates on the annual. We're going to have to extend this. One, no, for a couple more. Okay, and then this is checking net income should match 75,768. That's good. Let's adjust this. Let's say you have a random end month here. It should still match. Perfect. Okay. This is looking good. Income statement's good. Now, because I did adjust the income statement positioning, I'm going to have to make sure any references from the other imported workbooks that were referencing the income statement, which there are going to be some, I need to make sure those are referencing the right rows. And that's what usually takes time, is checking those kinds of references. Give that a group. All right, next up, balance sheet, which pulls from the cash flow. So we actually want to go to the cash flow statement first and look at every single item. So income statement, 10. Let's make sure that's the total revenue. Yep, 10. OpEx is, okay, this will probably need a modification. This is pulling C25 and C15. So 25, that's good. And then 15, oh, yep, that's fine. So that works. Interest is in 31. Okay, that carried. Taxes, 58. Yep. If you're doing a three-statement model for the first time, trust me, and don't be worried or frustrated. You'll probably have some circular reference errors. You'll probably not balance the first try. And trust me, the only reason why I usually match now is because I've got the logic imported. So I just got to kind of finesse the formulas, but it's already there. But when I first built, like if I do a three-statement model from scratch, especially if there's a lot of non-cash items and reconciliations in the cash flow, it can be difficult. So just try to go slow and make sure you're working one thing at a time, and you'll be fine. Okay, so here, oh yeah, this looks good. I believe our terminal value, we're going to have to get that adjusted. So we go trailing 12 months revenue, which is what we want. Let's make sure though. So income statement 28 versus 71. So 28 is EBITDA. We don't want that. We want a run rate of revenue, so we want 10. We're going to sum 10. So the trailing 12 months, we can put this back to the end. Trailing 12 months of revenue, 45,468. Good, that's our number. A multiple will be defined, and there's the exit valuation. Let's zoom in here a little bit. Okay, we're moving along here. What next? Let's go to the cap table. So this obviously is not right yet. We'll have to finish the cash flow first. All right, so sale of business is in here. Good. Sale of depreciable assets looks like it's in there fine. Yep, that's the total we want. Long-term debt, so it's coming in the first month. It'll be paid off on the exit. Actually, it'll be part of principal payments, which you can see here for financing activities and sale of company stock here. Okay, so now this is where, okay, that's fine. Cash flow statement annual should match 88,166. Yep. Now here's where it gets a little tricky. So we want to figure out the minimum cash or equity investment that's going to be needed to cover the startup costs and any burn based on the model. So we do that by looking at the monthly detail. And this is going to be, we'll have to update it. This is going to include all the different things that are going to affect cash flow, and we get a running balance and take the minimum from that. Now here, okay, so we have sale of business, but we're going to just reference the cash flow statement now for this. And then any items we don't have, we'll have to add. Debt repayment we actually don't need because you can see now it's going to be in the amortization area. Debt proceeds is fine. This is fine. So CapEx, this is not necessary. We'll actually have our own CapEx item. Cash flow January. What else? Taxes will be in here. Oh wait, I thought I put taxes in here. Here. We're not actually going to put EBIT. Go taxes. Okay, and then this is actually going to be a plus. And the way this is structured, we'll actually have to add in the sale of the business plus, oh, not CapEx. Actually, we don't need net earnings in here anymore. Because we have, now that we have the formal statements, we can reference that. So we'll have taxes here. These are actually all going to be classified as other cash flow items. Don't need this. All right, and then we'll have fixed asset sales proceeds. Which is that one. We want to make sure that we match the cash flow here with the what's going on in the three statements. You see these totals should equal 47,468, which is this number. Okay, so that's good. We could pull these up. We don't care about equity here. So now cash flow will equal. We don't care about this either. Cash flow is going to equal our EBITDA minus debt service plus any debt proceed plus sale business plus capex plus this, because capex is coming through as a negative, minus here. So 112,707. We got 88, so these are not congruent yet. To see what we're missing. Because this is one of the best, or this is what the main purpose of the whole model is. Well, besides showing, obviously you're showing all the logic of the business and how everything works. But for an investor, or even for if you're doing all by yourself, you want to know the minimum amount of equity that you're going to need. So we'll take row 236 to figure that out. So on here, minimum equity, that's going to be monthly detail 236. So we bring that over. And then this should flow everywhere else. Cap table. We'll have to update this. All that will be updated, but the first things first, we need to make sure this is right. Okay, we got our break even. Month 15 is the break even when you essentially have enough cash generated to repay the equity. All right, so let's see what we're missing, because the ending cash balance should match, and it does not. It's not even close. We're at 89 million here. And on our monthly detail, we're at 112, 20 million. So let's look at our cash flow in that final period. Positive 48,634. We're at 50, so taxes. Probably because I had this highlighted a different color. That's actually happened in the last two models. Taxes have been the thing that's thrown the balance off. $48,634. Now probably, yeah, now it matches. I can drag this back. Raise the min equity a little. But here, now, our cash balance 89,477 should match this. Oh, 88,166. What are we out by? And this will actually be one of the sanity checks anyway, so let's put this in here. Oh, we have a circular reference. I think I got to put it in here maybe. This minus, yeah. So 1 1,311,000. Oh, right. So that's the equity required, which is correct. If you plus this, you're not at 0. So we're good there. Now we got to make this annual detail match up. We changed quite a bit. So other cash flow items was in 207. Let's get this going. 207, because we removed all of this. That. And honestly, it's going to be easier just to paste this in. So that's at 207. And then we put startup cost in 215. And I think we can now just go sum ifs. Make sure this is right. Okay. And then the bottom section, all we really need is cash flow. 235. Don't care about this or this. And we'll say, if we go minus our monthly number, these should always match. Okay, so that's locked in. All right, it's 10:30. So far, the chair's feeling pretty good. We have the monthly and annual detail reworked, so that's all completed. Cash flow statement, income statement, balance sheet should be good to go. Let's check if there's any references to the income statement real quick. Because we did change, yeah, like this here, accumulated depreciation. So some C34, C49. Okay, good. So that moved with it because we didn't change anything there, so that's good. Make sure there's no other references to the income statement that we don't know about. I didn't even check to see, but yeah, our balance sheet balances. That's good. Okay, so I believe this is fully integrated with our three-statement model now. All of these are upgraded. We'll have to update. Next is going to be updating the distributions, executive summary, as well as making sure all the visuals are still looking good. Looks like the cash position. Well, let's just do this now. Just reference the annual on this one. This is really cumulative cash flow. And if we don't include an exit by putting no here, That should flow just fine. Let's see, now we're at 50 instead of 89. Okay, good. So that's working. All right, that's all perfect. So tomorrow, which we're really flying through these, but that's good. I guess if I finish early, I'll just if there's I'll wait for any requests. If there's no request for any cool logic, then we'll just be done until next Monday. But so tomorrow will still be a lot. We got to clean up everything. Um, what are we doing? Oh yeah, distributions, executive summary, and visuals. Clean, make sure everything is looking correct. We'll have to update the cap table, and then I'll put the index, update the index with the new pages, and then it'll be all set. Now, if you want to purchase, this will be on the SaaS bundle number 6A. You can buy it right now, but it's just not going to have the three-statement modeling and everything, but it'll have the monthly and annual details and distributions and equity required. It just won't have some of the CapEx stuff with the depreciation. It won't have, and like I said, the three statements won't have a cap table. It will have that by tomorrow, and then it'll be done. And so that will then conclude our top. We'll have all the models in our top 20 templates by sales volume. That'll be fully updated with all the startup models that are included. The next model I'll do, which is going to be next week, will go into the lending model. It'll be the lending as a service template. So this will get a good one. This is, these are a lending as a service platform like this doesn't have any debt. It it will take it essentially connects lenders and borrowers. I mean, technically it would because the lenders would deposit money to the platform, and then the platform will lend that out. That'll be lent out to the borrowers, and all happens in like a marketplace. So technically, the platform is responsible for making sure the repayments happen and the interest payments and all that because they facilitate, but they don't really hold any balances. So that shouldn't be too bad. We'll get into it more on next Monday, though. That could be an interesting one. The most interesting one is going to be probably Enterprise SaaS because I'm going to do receivables in that, which is something I've never done in a three-statement model. So that'll be fun to figure out. And then the manufacturing plant one. Those are going to be the two most complicated templates. So, and we're going to be coming up to them soon because they also sold pretty good. So they'll be down the line here a bit. All right, I am headed out. I'll be back tomorrow. Don't forget to check out smarthelping.com for all kinds of stuff, not just startup models, but also accounting tools, HR tools, receivables, payables, tracking, inventory stuff, all kinds of things. Subscribe to the channel if you haven't. Like the video. All great things that help me that you can do for free. And I'll see you guys tomorrow. Likely, I think I'll have the cam up next week. I believe. I just need to get used to or see how this is going to go. Sitting in the chair and at my desk instead of on the couch. All right. Have a great Tuesday. See you guys.